Hey, what's up, my beautiful people? It's your boy Devo, so motivational, back with another day trading spy recap. And today we got a winner. Not much, but we got a winner. I'm gonna show y'all. I'm gonna show you everything. We're gonna go over the earnings we have that we had today. We're gonna go over the news that we had today, and we're gonna go over the news that we have tomorrow. We're gonna have. I'm gonna show y'all why we had actual drops in our Amazon and Apple stocks. Even though earnings came out decent for them, even though they came out with earnings, a little higher than expected, but we still had pretty much it dumped. I'm gonna tell you why. And today shouldn't be too long, but real quick, I want to say thank you guys for everything you do for me. Thank you for all the likes, comments, subscribes. We lost a subscriber, kind of triggered me because I came on here and told you guys that I was very happy about hitting the 50 subscribers, and we lost a subscriber. But I'm not too worried about it because they're gonna come right back, right? When they see these winnings start coming in and coming in and coming in, they're gonna want to come back and join the family, right? And I'm gonna remember who was really with me on the journey, through the journey from me becoming. Because remember, this is the journey from Devo going from non-profitable to being a profitable trader. This is the $1 million journey, but this year is called the Road to 100K. Okay, keep that in mind. It's Road to 100K for this year, but this is the $1 million journey. Okay, and all you guys are with me on the journey, and that's why I love every single one of y'all. Okay, so let's get right into it. Okay, so to start today, we had the initial jobless claims, continuous jobless claims, 4-week average jobless claims. We had manufacturing employment, manufacturing PMI. I'm not sure what that exactly is. Bill auction, mortgage rate, and pretty much all of it was pretty much lower and higher than expected. We had jobless claims higher than expected, forecast 1844. It came out 1916. Initial jobless claims 241. Forecast was 225. Global manufacturing 50.2. Forecast 50.7. Excuse me, my good people. Remember, the yawns always kick in once we hop on stream. Okay, I literally do not yawn until I start making a video for you guys. Manufacturing prices 69.8, forecast 70. So we're seeing everything. Mortgage rates 5.92%. We didn't even have a forecast, but the previous was 5.94%. So that's actually pretty good, right? 15-year mortgage rates going down. 30-year mortgage rate 6.76%, and it was previously 6.81%. So that's pretty good, right? Fed balance sheet 6.71 trillion, previous 6.73 trillion. Let's read what this is real quick. Central bank balance sheet in the United States decreased. Meaning in the previous week, central bank balance sheet is the United States average. Okay, so it doesn't really tell us exactly what it is, but it's saying it decreased. Yeah, I mean, it's not telling us if that's good or bad. I'm trying to look at this chart right here because this can kind of tell us, because we know we were in a bull run 2024, right? 2024, we were in a bull run. So their balance sheet is lowering and lowering. That should be pretty good, because 2022, we know we were in a bear market and it was at the high of 8.9 million. And as it starts coming down, I believe March 22nd to March 23rd. Let's look at this real quick, just so we can. This is how we learn, good people. Obviously, I could search it up, but let's just make this a little analysis for ourselves, okay? So let's look at 2023. Yup. So about March 2023, you see we were in this downturn, right? And what did we have? So this is how we learn. Stay with me, my good people, because look at this. So the balance sheet went up in March 22nd. We had this spike up, but we see we were in this downturn. And during this bull run if we start from right here, October 23rd all the way up to December 24th, we see it lowering. Okay, so this must mean that's pretty good. The Fed balance sheet shrinking should mean that's pretty good for the economy based on our analysis, right? Sorry, my good people. I just want to go back to it. Okay, so that should be pretty good, and that's how we learn. We make analysis and we go and study it. Okay, and so we had I mean, I'm not gonna say bad data, but the jobless claims was kind of lower than expected. I mean, jobless claims was higher than expected, and that's not very good. Why? Because we know if jobless claims, that means the companies aren't hiring. We already had the lower GDP. We went over why the GDP was lower, but still overall it's still lower, and we have jobless claims coming in higher than expected. So that means the companies aren't hiring. Okay, so I mean it's not the best of news. Okay, um, let's go over some things we have going tomorrow. Man, excuse me, my good people. Tomorrow we have unemployment rates, non-farm payrolls. Let's click on this real quick. U.S. economy added 228K jobs in March 2025, well above a downwardly revised 117K in February, and beating forecasts of 135K. So that is really good. In March, we added, we came in at 228K. So that's good. If we come out higher than forecast, that could be really good. Unemployment rate, if it stays at this 4.2%, that is very good. Average hourly per, so these things are going to be very important, and this is going to come out about an hour before the market opens, so we can see pre-markets probably pump if these things come out good. We're going to have government payrolls, manufacturing payrolls, and things like that, but I think these non-farm payrolls and unemployment rates are going to be the big thing for tomorrow. Okay, so real quick, I want to come to you guys and show you the earnings we had today. So today we had Amazon earnings, Apple earnings, Reddit, Airbnb, Roku, Riot, but the Apple and Amazon is what's really going to move the market, right? These are like some of the biggest movers. These are in the Magnificent Seven. Some of the biggest movers that move the company, right? The S&P 500, the economy. The S&P 500 is the 500 of the biggest companies in the world. So that is basically the market, right? And so Amazon, Apple are big in those, right? And so reported Amazon actually came out pretty good with earnings with 1.35 EPS, I think that's what they call it, and it came out 1.59, so that's really good. And the revenue was estimated 1.1. I said 1 point. Excuse me. Estimate earnings was 100. The estimated revenue. Sorry, it was 154.64 billion, and it came out 155.67 billion, 8.6% growth. Which is pretty good. What, right? And so, real quick, sorry, my good people. I'm showing y'all real timing. I didn't have this pulled up for you good people. Sorry about that. So market open, we had Amazon at $190, right? During the market open, we had Amazon at $190, and after earnings, we see it's at 184, down 3%, minus $6, right? So if they did good on earnings, why did they drop? Well, this comes to this right here. So Amazon reported better than expected earnings and revenue for first quarter, but it gave light guidance for the current period. The company anticipates operating income of between 13 billion and 17.5 billion, while analysts projected 17.8 billion. Okay, so their next quarter earnings are there. They came out in forward guidance, which has been actually moving these companies' earnings. We'll go into that, but their forward guidance, they said they expected their income to be between 13 to 17.5 billion, while analysts had it projected 17.8 billion. So even though they beat the earnings this time, the market is looking for forward guidance. They're looking for what their money is going to do going forward, not what their money already did. You know, obviously good earnings is good, but they want to hear what is the company going to do going forward? You see what I'm saying? And so they're basically saying their revenue is going to go down because of tariffs, of course, right? But so that is not good, right? And why we know that the forward guidance is what what Wall Street is looking for is because, like we said, the earnings were good, but it still dropped. It still dropped 3%, minus $6, right? And then how we also know is because I don't even have to pull that up. How we also know was because what did Tesla do? Well, Tesla straight tanked on earnings. Let's see. I think. Oh man, we can't go back in time. Okay, forget it. But Tesla straight tanked the earnings. I think they were down like 70% or like 70% from the reported earnings. But their forward guidance, Elon Musk came out and said that he was going to cut his time with Doge, that he was only going to be in there for about 1 to 2 days a week starting May. He said that he plans to come out with the robo taxis. He was talking about the robots. So that's what Wall Street wants to hear, and the big boys, the big money, the billionaires want to hear because the forward guidance, what's going to happen in the future with their money. That's what they're interested in. Yes, they want to see that the company is doing good and creating revenue, but they want to hear what do you have to say going forward, okay? And so exactly what I said, how we know the forward guidance moves it. Obviously, the earnings is good again, but they want to know what their money is going to do going forward. So just like how Tesla dumped on earnings, right? So that was bad, and they did bad on earnings. But forward, Trump came out. I mean, not Trump. Elon Musk came out and said a bunch of good stuff coming forward, right? And so that's what actually got that pump. Because as you know, they had bad earnings, but it pumped. And so Amazon came out with bad forward guidance saying that next quarter, basically, they see their revenue dropping. So it dumped. You see what I'm saying? So it's kind of the opposite. The same with Apple, right? We can't. Their earnings, EPS, was 1.61. They came out 1.65. Their revenue, um, came out 93.56 billion estimated, but it actually came out 95.36 billion. So it came out 2 billion up, right? So that's good. 5% growth, 2%, 2.5% surprise. But Apple stock fell. Why? Because their forward guidance, right? And then it says, is navigating an uncertain policy environment. Tim Cook is navigating an uncertain policy environment. For now, the guidance that Cook provided was for 900 million in extra June quarter cost. Okay, so that means he was to say what like to tell y'all what that means is he sees them losing about 900 million. Them paying have to pay an extra 900 million in extra June quarter cost, provided that tariff rates remain as they are and are not factoring in the prospect of an economic slowdown. While the company's forecasting left something to be desired, Apple's numbers for the latest quarter were pretty decent. The company sold 46.8 billion worth of iPhones, beating Wall Street's expectation of 46 billion. Earnings per share of 1.65. Top. Okay, so now we know exactly why it's called EPS, earnings per share. Okay, we're still learning, but we're learning together. Okay, so it's called EPS. EPS means earnings per share is $1.65, top to 1.62. Fact set consensus, as did overall revenue, which had 95.4 billion, cleared analysts 94.5 billion mark. Okay, so they did decent on earnings, but again, their forward guidance, Tim Cook came out and said they could see a 900 million loss next quarter, right? Because an extra June quarter cost. So that is not good, right? So that is not good forward guidance, okay? So that is why those two companies, let me show you. That is why those two companies actually dumped, right? Because market open. Oh man, they're not gonna show us it. Come on, man. Okay, well we can just call them after hours. After hours, we see Apple dropped $8, so that means it was up to 213. It dropped $8 and it's down 3.8% because of the forward guidance. Okay, so now that we understand that, let's just get straight into the charts. Those earnings actually came out after market close, so I mean they don't really have nothing to do with the market. Um, oh yeah, I already went over the news that we had today. So everything that happened today was basically just on yesterday's earnings, the Meta and Microsoft earnings. That's pretty much what moved the market today, and then these things, this data that came out today before market open actually also moved the market. And we didn't have too much excuse my good people. We didn't have too much movement in the market today. As we can see, it looks like it at the end of the day, this is consolidation, right? Equal high, equal lows, right? So at the end of the day, this is just consolidation. But there was money to be made in this little 559 to 563 move, right? Did we make that move? No, we didn't. But we're going to capitalize. Don't worry, my good people. We're still learning, but we will capitalize, right? We're getting better every single day. So we did have this gap up from 556 up to 559. We started at the support, exactly what we wanted to see, right? Remember yesterday we came out and said we want to be near a support or right near that area of resistance, or this was resistance, but it was on top of the resistance. So we want to see it hold resistance, make it support, which it did, or we want to see it drop below this resistance and make and keep it resistance, right? And so we held this resistance. We came up, and this is where I'm gonna show y'all, because I was looking at everything. I was on it today, right? And I was willing to take the risk, right? I had my fair value gap. I seen it rest on top of this, on top of the range, right? Making this top of the range support. But when I scaled down to my 1 minute, what did I see that threw me off? Why I didn't take the trade? Oh man, where am I? I'm all over the place. My good people. Okay, why didn't I take the trade? Well, so in my 5 minute, this is all a fair value gap, right? But when you're in your 5 minute fair value gap, you want to scale down to your 1 minute to get the sniper entry. Well, my 1 minute, I only have this fair value gap. Nothing else is really a fair value gap, right? Well, this is also a cleanup of liquidity, unfilled orders, right? You also clean up liquidity in these wicks right here, right? But there's no wick on this candle, right? So when we were pulling back, I was like, okay, we're in my 5 minute fair value gap. I want to see a wick at the 1 minute fair value gap and start to get these dojis and start to give like a strong move and strong momentum. And I want to see strong volume, right? Well, we ran through this fair value gap. We came down here, but we never wicked. We never gave no wicks, right? We were never giving no signs of buyers stepping in, right? It was just solid candle, and then we just had another solid pump, right? We know we usually get these wicks, right? We need these wicks because it's showing that the buyers are stepping in. Also, I mean, the volume was a little higher, but it's not much higher, right? And the volume, all right, so if we look at from 928, so 5 minutes to come down a dollar move, but to get from 561 to 562 a dollar move, it took 14, almost 15 minutes. So you see how there was no momentum, the volume wasn't high, it didn't stop at that fair value gap, it's not giving a strong reaction, not giving these wicks at the bottom of these red candles to stop at a fair value gap. So you see how it's just not giving strong signs, even though it's showing that in the 5 minute your strategy, even though in my 5 minute it's showing the strategy. Oh man, I hate switching these time frames, it keeps throwing it off. Even though in the 5 minute it's showing the strategy, when you look deeply and closely, when you come and zoom in, you're not seeing the full thing really kind of set up. So I passed out on that one. And yes, it did chop up, and I'm like, oh my god, if I would have just hopped in, I would have, at least wrote it up. So, somewhere, it would have $2 move, whatever. But at the same time, trust your strategy. Yes, it did follow my strategy in my 5 minute, but the 1 minute was looking a little iffy, okay? And so that's where I didn't go in. But don't worry, at my 11 o'clock, when I seen price start dumping, I was like, okay, well, this is my pullback right here. I want to see it give me a change of character, a pullback into a fair value gap, and then I'm in, right? And that's exactly what happened. We gave the change of character. We gave this change of character right here because we broke our last higher low. We gave our change of character. We gave this mean fair value gap, which was perfect. This was perfect. Okay, that was perfect. That was perfect. Now, the trade didn't work out perfect, but the strategy ended up playing out perfect, and it just didn't fully give us what we fully wanted, right? But that's okay. You know what I'm saying? Because more times than not, that's why we have our strategy there, because more times than not, our strategy is going to work out, okay? And so when we dropped down, we had this mean fair value gap that I was already waiting for. And we go down to we come back to our 5 minute. Because remember, it's top-down analysis. We always got to start from our big time frame and come down. So that's where right here we didn't have a wick on top of this green candle. But if I come down to my 1 minute, and you see this still change of character, we had to pull back into this fair value gap, but we didn't have no wick on that. But if you come down to my 1 minute, we are seeing a little bit of wicks right here. We're seeing wicks. We're seeing strong candles, strong big candle. We're not seeing much volume though. Not much volume down here, right? We're seeing these big red candles, basically a whole 50-cent candle, 60-cent candle, but we're not seeing that red volume pick up even though we're having these drops, right? You see, even through this drop, we're not seeing high volume, right? That's still not high volume. But when we came down, we gave this little pullback right here. I was like, nope, I want equilibrium of my fair value gap at least. So when it started dropping down, I was like, okay. And what did it do? It came all the way back into this fair value gap. And this is where I had my short position. I had my stop loss up here. I wanted my short to be down here because I wanted to target these lows. Why? Because I wanted to try to fill this gap somewhat. I wanted to take these lows out and try to reach into this gap, but my take profits were these lows, okay? So I wanted to see price take those lows, and that is a 7-1 risk to reward. Oh, Jesus Christ, that's pretty high. But I'm gonna show you where I got in, and so I'm gonna be able to move this down, okay? So when I didn't get in right here, but I got in at this pullback. When it started breaking down, gave this little retracement, started breaking down again, I got in at this candle. So that's where I need to be better at my entry so I can actually follow my full risk to reward. So you see how I would have had a 7-1, 5-1 risk to reward if I would have got up right around this candle right here and then got this retracement up here. You see how I would have had a 2.6 to 1. But no, I waited to get all the way down here, and so that throws my risk to reward ratio off, and it's basically a 1 to about 1.3. So just 1 to 1. Just keep it simple, 1 to 1, which is not what we want. Remember, we want the 2 to 1 risk to reward ratio, okay? And so that's where I'm gonna get better at. We always want at least a 2 to 1 risk to reward. Remember that, okay, my good people? But I hopped in right around this candle because I was just waiting for extra confirmation. I seen us try to itch up. We got that reaction. We dropped. We started tanking. And that's when I got in right here because I'm like, okay, that felt like it's a safer entry. And we broke down a little bit more. And remember, I had 3 contracts. So I bought 3 contracts, right? And so we dropped down a little bit more. And I was like, okay, come on. Got bought up. And this is where I was getting a little frustrated. Bought up again. I'm like, man, that support is really holding up. I was down some money, right? It's not touching my stop loss. And this is where I moved my stop loss actually down to here to reduce a little bit of risk. I moved my stop loss up to here. And we came up, and I was like, okay, when we dropped down, we create like another little gap. We filled this gap. We gave a little drop, but we came up and swept this and filled this gap. And I was like, okay, that should be the final one. When we started dropping, I was like, that should be the final one. That's pretty much like all the liquidity areas, right? We filled this fair value gap, we dropped down, came up, filled this gap because this is basically a breaker structure, right? So we filled this fair value gap, this like basically order block area. Then we try to drop down, but then it swept that to actually touch this strength candle right here. Yeah, basically this is really the order block, right? This is just a little retracement. This is like the actual order block, okay? Because why? Because this is the block, the candle or the candles before the breaker structure. So this isn't the order block. Excuse me, my good people. This candle right here is not, this white candle right here is not the order block. This white candle and red candle up here would be considered like the order block area, okay? Because this would be the move that broke structure, right? This is just like a little retracement, right? So we came up to this like retracement, and sometimes you will get that reaction off it, but then I was like, okay, it swept this, and it actually touched like the order block area, kind of like an area, like a fair value gap right here, right? And then once we started breaking down, I was like, okay, this should be the one. That is all the areas of liquidity. You gave all this chop, you got liquidity, you filled these gaps. This should be the drop. We started dropping. Its support held up again, pushed it up. I was like, oh my goodness. Then we started breaking down again, and when we started breaking down again, I was like, this is the final straw. This is where we should break lows right here, right? When we started breaking down, we got bought up, and we started getting these white candles. I called it quits, right? I called it quits, and I only made 42 bucks. 42 bucks, so not much, but look what happened right after I got out. This support blew out of the water. So I could have been stopped out for probably about 120, 130 bucks, but instead I ended up just calling it quits before my full, take profits here. Obviously down here I would have been up about 300, 400 bucks, but it couldn't get all the way down there. It couldn't get all the way down here, right? So I got in right around here. See, that's where, yeah, I got in right around here. So that's where I messed up my risk to reward, but I'm gonna be better at that, right? Because I waited too long to get in, and so my stop loss has to be so high. You get what I'm saying? So I've explained that in previous videos. That's why you want to get in right at like the break of structure and right at your fair value gap, because your stop loss is so tight, right? Because you already know if it comes up above a certain level, then obviously it doesn't want to go down. So that's why you want to get it like right around this fair value gap, so you don't. Whenever you get in all the way down here, you don't have to have your stop loss way up here. Okay. So I'm like, okay, this one should be the final straw. I called it quits once it started breaking up again. Called it quits, up 42 bucks. And look what happened. That support held up, and price was honestly just doing its thing. I can come into my 5 minute. I can come into my 5 minute and say, okay, it filled this gap and it did this. No, I mean, it just, this support was just holding up, and it was just holding up. Market was just kind of ranging and consolidating. And then, like, I mean, it did end up taking these lows, but I mean, this is literally at the end of the day, literally 10 minutes before the market closed, and it just straight dumped, right? Just straight dumped, and it actually took out these lows, wicking basically the equilibrium of this gapper, right? And that's basically like a fair value gap. The gapper is like kind of like a fair value gap, right? So at equilibrium, that's pretty much halfway. Pretty much. Oh my goodness. Pretty much 50% of this gapper, right? Pretty much. So that's pretty much it, my good people. That's pretty much it for my trade recap right there. So I did miss this one, but I showed you why I didn't miss it. I just chose not to take it because whenever I zoomed into my 1 minute, it wasn't giving the proper signs that I wanted for it to keep breaking up. And then so I got in after my change of character. I got in right around here, and it was struggling too much, and I've seen it cleared all the areas of liquidity. It gave the chop and everything, got the liquidity, and it just didn't want to give me the move down. The support was holding up, so I called it quits early. And not even early, I called it on time, because right after I got out, we see this massive move came up. And so I put all these things on Instagram. Remember, I let people know on Instagram kind of what I'm looking for, and kind of what I'm doing, and I let people know ahead of time. And so if you guys want to get more in touch with me, because I answer all DMs or anything, and if you have any like content ideas for me to do, and like more things you want me to break down, and things you want me to go more in depth with on IG, Facebook, you can get more in touch with me. My IG is Devo So Motivational. Devo So Motivational. Same with my Facebook. Okay, that's just if you want to get more like personal access with me. Okay, my good people. And so, that's pretty much it with that. Tomorrow, what can I see? Well, let me look real quick to see what the pre-markets is, or aftermarkets. I'm sorry about that. So aftermarkets is actually pumped right back up, and we're at 562. And so if tomorrow we start at this 562 area, this is the area of support, because as we see, this was the area of resistance. I got to get a good number. I can't do it. This 30 right here. Bam. Yep, it fits right on it. That's an area of resistance. So we can hold this area of resistance and use it as support. Let's leave it red for right now, because it's actually it's right over it. It's at 75, 562.75. So it's right over it. So we want to see tomorrow if the market can hold this area of resistance and make it support. Why is this resistance? Well, we see that this was an area where sellers would keep stepping in and kept knocking it down. It actually filled this liquidity, so it's actually pumping up right now. Excuse me, my good people. So let's see if tomorrow we can hold this area of resistance, and make it support, and keep trying to pump up to this 565, then 567, then 570, or if we want to actually get like a little fake out pump, use this support, pump up, but then end up breaking down, something like that. Well, it wouldn't be that deep at first. You see what I'm saying? That would be a breaker block formation, so that'd be a little tricky. That's why we give it a little time. Or we can just straight out the gate, just kind of break through it and use this resistance as resistance again, and use this 559 to hold up, and we kind of be like consolidating through this area, or maybe we can break through this support again. Okay. So that's pretty much what I'm looking for. And I know you're saying, Devin, it can either go up or down. That's basically what you're saying. Yes, I mean obviously the market can go up or down, but we have these levels, we have this resistance, so we kind of know, well, we pretty much know. I mean, it's at this resistance. So if it wants to hold this resistance and make it support, just like you see when I mark out these levels, price reacts these levels. Not be just because I draw a line on the chart and they respect them. No, because you look at previous areas where it's showing seller stepping in, seller stepping in, seller stepping in. You see it, so it was resistance. So I had it as resistance at first, right? But then whenever it broke above, that's when I mark it green to see if it can hold it, right? And so it did hold it. See, just right here, we see resistance, resistant. It broke through, so then you mark it green to see if it can hold it. This was the area of resistance, right? But we knocked through and we held it, so now it's an area of support. You see what I'm saying? We see it's a support. Now we see that there's resistance right here. So tomorrow, if we pump above it and we use it as support, you see what I'm saying? So that's why I have these things marked out, so we can know kind of where price wants to react towards, or yeah, exactly. So we know where price wants to react towards. So if it wants to use it as resistance, and if it wants to use it as support, we know it wants to react to this next area of resistance. Or if it wants to knock through the resistance, keeping it resistance, we know it wants to come down to this other area of support, right? So that's why we mark out these levels, so we can have a gauge and not just have a random reaction at any area. Because say if I didn't have any of these areas marked out and we just seen price coming down, we would hop in and we would just be writing it, right? We would just be sitting there just waiting for price to just give us as much money as possible, right? And then when we get a sudden reaction off of a support, we would be like, oh man, like what is it doing? You know what I'm saying? We wouldn't really have like a clear picture of what's going on. Okay, so that's why we mark out these support and resistance lines, so we kind of have a clearer picture on where price wants to retrace towards. Okay, and so let's just real quick, let's see what we have coming out tomorrow. I already went over it with you. I'm going over again. We have non-farm payrolls. We have unemployment rates, average hourly earnings month on month, average hourly earnings year on year, participation rate, average weekly hours, government payrolls, manufacturing payrolls, non-farm payrolls, private, U6 unemployment rate, factory orders, month on month, factory orders, X transportation. So total vehicle sales. So I'm not gonna lie, all that sounds very important. I mean, we obviously know the non-farm payrolls, the unemployment rate, average hourly earnings. I mean, all of this sounds very important. So tomorrow we could have a big move up or a big move down, but we're going to be prepared for it. We're going to trust our strategy. We're going to follow it, and we're going to get to it tomorrow. We're going to crush it tomorrow. I feel it. We're going to crush it. Down on the week, we're down $130. Last week we made $130, so we're pretty much break even from last week and this week. But tomorrow we're going to break that, and we will be up on this week, and we're going to finish 2 weeks in a row, 2 consecutive weeks in a row. Green. I'm calling it. I'm speaking it into existence. Not just speaking into existence. I'm practicing for it. I'm studying for it, and we will get to it. Okay, my good people. Earnings. We don't have no earnings for tomorrow. Loop Media. Don't know what that is. Doesn't sound important. Nobody knows what that is, right? I mean, some people probably. I don't want to be disrespectful to Loop Media. I don't know what that is. I don't even think it's in the S&P 500, so it's not very important. Okay. So remember, Amazon and Apple tanked because of forward guidance. The market wants to see forward guidance. Let's see what we have actually going into next Monday. Oh, so next week's gonna be a big week too. We have Palantir, baby, and Hims and Hers. Ford, which we already know Ford is gonna be doing real bad. Ford's getting beat down because of these tariffs. Okay, but Hims and Hers, and Palantir is a big one, right? I'm pretty sure we have a lot of economic data, but we will get to that next week when we get to that, okay? And so I don't want to make this video too long, but we pretty much went over everything. And remember, I love every single one of y'all who with me on the journey. Stick with me. It will be worth it. Remember, this year, it's just the road to 100K, but ultimately, we're on the journey to becoming a millionaire. And we don't think it's going to happen. We're not hoping it happens. We know it's gonna happen. We just don't know when, but we know it's gonna come. Okay, my good people, not just for me, but for you as well. Stick with me on this journey. We're all gonna learn. We're all gonna make money. We're all gonna continue to grow and get 1% better. Okay, so I love every single one of y'all who with me on this journey again. And remember, guys, stay persistent, passionate, and make sure y'all get paid. All right, peace.